Hi, it's Ashley Corden, and today I wanted to bring you in on a conversation I'm having with Jax Petty, who is a real estate attorney and owner of First Liberty Title. We're talking about seller financing today. And Jax, I really feel like this is super underutilized by sellers and buyers these days. And I really feel like it's mostly because there's this misunderstanding. So what are your thoughts on that?
Well, I think a lot of times people remember the horror stories, things that were done incorrectly, maybe not set up with the right documents. And so I'll generally see these one of two ways. I'll see them when we do them correctly, or I'll see them when somebody else did them incorrectly and I'm being asked to fix it. But if it's done correctly, it's very safe, especially if you use the correct documentation.
Right, correct. And so there's a lot of benefits to the seller for using seller financing. And I think that it's just that misunderstanding and just trying to kind of illuminate the situation for sellers, let them know that there's a lot of positives for them. So number one is that they can sell their home for over market value. There are so few homes on the market that are available for seller financing. I mean, last I looked, there were maybe 18 homes total throughout the state of Utah that had that as an option. And so there's far less competition, and there's that segment of buyers who that is their only option for home ownership. And so with so few homes, we all know the law of supply and demand, you can increase the purchase price of the home. Also, with the interest rates being so amazing, you can have the seller can make the money off of, maybe they've got a low interest rate on their first mortgage, and so now they can turn around and offer seller financing for that higher interest rate. So typically, what are you seeing interest rates being offered in seller financing?
So the interest rate is really dependent upon the strength of the buyer. And I think one of the big misconceptions that would be out in the general public is that these buyers are not people of quality or assets or means. We've had many people in Park City that just don't want to deal with the bank. So they'll come in and put down $350,000 on a property because it's seller financing and they don't have to disclose all of their corporations and interests and trusts and things. We've got several people that'll buy a business and they can't use that income for 2 years, but they're very responsible. Another thing, I'm sure you're aware, in Utah we have several people that make a lot of money in multiple level companies. Those are very difficult for banks to lend on, but we had one recently where it was a multi-million-dollar property. The gentleman was making $150,000 a month. Certainly could afford the payment, put down a huge down payment. I mean, there are very good buyers out there, and that minimizes the seller's risk. And like you mentioned, there's such a demand for it that the sellers can be selective and really get the down payment and the terms and the interest rate they want to get. And I think what you were hinting at is sometimes if you have that 3.5% rate, it's not uncommon you can find a buyer that would pay you more than you're paying the bank in interest to give them the seller financing. So you're basically lending the bank's money, right, and you're getting the benefit.
Right. And then how you mentioned that there's that huge demand, that demand is only going to be increasing, I believe, over time, just because of the current economic climate that we're seeing. So a lot of jobless claims, over 26 million people out of work. And so there's going to be the economic backlash is that fewer people are going to be able to go out and get that traditional mortgage. So I'm also a licensed mortgage professional, and so someone might say, well, why would you even want to help a client with seller financing? Because it wouldn't benefit me. But I'm all about the relationship building business. Not focused on the transaction, but the long-term relationship. And if I can help that buyer get into a home, and they've got to refinance, whether it's 1 year down the road or 5 years down the road, I would love to be their first contact for that refinance. But definitely we're going to see the need grow. So now it's just an opportunity to educate sellers on the benefits. So a couple of things, let's touch on the benefits for sellers. So faster closing, a cheaper closing. You're not waiting for lenders. You're not waiting for appraisals. The flexible terms, you can, with traditional mortgage, there's minimum down payments. In seller financing, it's basically, you get to structure and negotiate that deal. Any other things I'm missing on that?
Well, one big thing is typically a buyer's going to want 3% in closing costs from a seller. In seller financing, there is no 3% closing cost. The average closing cost for a buyer is $500. So it's significantly less expensive for the buyer. Therefore, they'll have more money to potentially put into the transaction for that seller.
Yeah, absolutely. Also, on the buyer side, one of the pros is that if they've been living in that home and making those payments, it's a lot easier to refinance that home than it is as a first-time buyer to purchase that home. And so that whole process can be a lot smoother in qualifying for that refinance.
That is correct. Yes.
And so, what have you seen as far as a homeowner who still has that current mortgage on that property, and there's that little clause in the deed of trust that says that the note could be called due.
The due on sale.
The due on sale clause.
So the due on sale clause is something that every loan since about over 30 years ago has contained. And it's something the bank has a right to do. And what we're seeing is the vast majority of lenders, they're not currently foreclosing even if they become aware of that. Now, you would never tell somebody it could never happen. Mm-hmm. But in the contract that we do, we actually assign that risk to the buyer. So it's something that the buyer would have to potentially, sell the property, but we have buyers that have been in the house the past 5 years. Just think of the appreciation that they've gained. And so if they did have to sell that property, instead of a rental where they're basically at net zero, they've got this huge amount of equity they can take with them into the next seller financing transaction. So it's just a matter of understanding the options and really, being proactive if that were to happen. But I haven't seen that happen. Especially there's a type of seller financing, and a lot of sellers favor this, because the risk is about the same as renting, but instead of a security deposit, they're getting $40,000, $60,000 as a down payment, where they can sell the property, but they retain the title. So it's similar to if you have a car with a bank loan, right? Everyone knows that's your car, even though the bank's holding the title. So in this case, the seller's holding the title to the property, but under the equitable conversion in Utah, the buyer becomes the owner, so they can take advantage of the tax benefits. And if they complete the contract, it's just the same as any other form of seller financing. But that's another way to minimize risk for a seller, especially one that doesn't understand all the risks of renting out a property, potentially getting it destroyed. Because as you know, there's a difference between an owner's and a renter's mentality. And so you can get a lot of benefits for the seller while still providing the ownership benefits to the buyer.
Absolutely. I really feel like this is going to be a topic we're going to hear more and more about, just with the current climate of the economy, the housing market. And I feel that as long as you are having a real estate agent and a real estate attorney and a tax or a title specialist who really specialize in these seller financing transactions, you could really mitigate the risks and have that transaction actually become a very advantageous thing for both parties, both the seller and the buyer. So if you are interested in learning more about seller financing, please reach out to me. Like I said, I do real estate, and I only work with people in the industry who are professionals in their industry. And Jax Petty, he is known as the seller financing specialist in Utah. So definitely reach out to me, and I can help answer any of your questions.